What was the name of that song? You guys are more interested. Doing great. Hey, Mass. Hey guys, how's everyone doing? Give me 1 second here, just getting a few things set up. Hey Mass, Burn. Yeah, Burned by Juice WRLD. That's the song. Play Gunna. No more music for now. We're just gonna get straight to it. I don't have much time with you guys. I do apologize. I don't have much time with you guys. I did not trade this morning. If some of you guys are probably wondering, did I take any trades? No, it's a bank holiday, Labor Day, out here in Canada and the U.S. So finally we get to share a holiday. Some days in the U.S. when there's bank holidays, Canada doesn't really have the same holidays, but today's a bit different. Anyways, that being said, let's dive into the backtesting session. Probably going to be a 30-minute class today. I'm going to backtest a full week with the 9 a.m. CR model. And I will also, you know what, let me not mention that now. Just if you guys want an extra model that I will backtest, stay until the end. Okay, if you don't care, then leave once I finish the 9 a.m. CR model. All right, does that sound good with everyone? Yes, sir. Cool. Perfect. All right, let's start. We are all the way back in June, so the start of June, and this might actually be a backtesting series. So I want to backtest months with you guys. This would be done for free and with the premium members. So going back and forth, probably going to do the free class like I am right now today, and then a premium class on the weekends, and then a free class next week, or maybe 2 weeks later. We'll see how we plan it out. But we're starting off with the first week of June 1st. All right. It's actually going to be June 2nd, but the Sunday, June 1st, June 2nd on the Monday. All right, guys. So let's fast forward up until the 8 o'clock, 9 o'clock hour here. You guys can see that. Before we actually explain everything about the model, let me just explain the actual concepts. So we're taking a look at the 9 a.m. CR model, and there's a few confirmations here. Very, very straightforward, very simple. We either use the 8 a.m. or the 9 a.m. range. So this is the actual CRT range. I'll show you why you would use the 8 a.m. or why you would use the 9 a.m. Okay, then we're waiting for either a 9 a.m. or 10 a.m. purge. What is a purge? A turtle soup, a liquidity sweep, whatever, of either the 8 a.m. or 9 a.m. range. Okay, so if we're using the 9 a.m. range, we need a 10 a.m. purge. If we're using the 8 a.m. range, we need a 9 a.m. purge. Very straightforward, very simple. All right, what's the next step? We need a key level. Now, this can either be coming from the higher time frames, like the 4-hour, daily, weekly, whatever, or it can also come from the hourly and 15-minute. That being said, if it is coming from the hourly and 15-minute, specifically the 15-minute, the probability definitely drops down. So that's where sizing down would come in, etc., etc. Lower probability trades. Okay, so let's actually just write key level, and we'll write 4-hour, 1 hour, or 15-minute. The reason why I'm not writing daily here is usually with a 4-hour key level, that's also going to be, so for example, a previous day high would likely be a 4-hour swing high. So it's pretty much the same thing, okay? That's pretty much it. For key levels, now we need the lower time frame CRT within the actual higher time frame CRT. This is going to probably sound very repetitive to everybody that watched my YouTube videos and all of that stuff. But bear in mind, repetition is key here. This is literally the model. There's nothing else to it. So I kind of need to. I'm forced to explain this again and again and again and again until it's ingrained inside of your brains. Okay, so 8 a.m. or 9 a.m. range, 9 a.m. or 10 a.m. purge, key level, either 4 hour, 1 hour, 15 minute, even the daily time frames and weekly. Lower time frame CRT within the higher time frame CRT. Some of you guys might be wondering, what time frame? What time frame is that? Either the 15 minute or the 5 minute. Okay. Now, what's the next confirmation that we're going to need? It actually comes down to the entry. So let's actually do this. What is the actual entry that we're looking for? Well, we need to see a 1 minute turtle soup, but let's simplify this. Let's look for an IFVG. This is exactly what I use. IFVG plus OB. Usually when the IFVG and the order block forms, you have what? A 1 minute turtle soup. Okay, so simplifying the turtle soup, calling it the OB and IFVG. Okay, that's usually where it forms. This is the model. You see how this can fit on a cue card? I forgot to mention something else. Bias and draws on liquidity. Okay, so coming into your day, you're going to have your bias drawn out. You're going to have your draws of liquidity on the day drawn out. And then you move on to this. This could all be written down on the actual cue card itself. This could be written down right next to your actual monitor. And you could view this every time you're entering a trade. Okay. That's the basis of this entire model. Both IFVG. Okay. Yeah. So entry is the IFVG and the order block, not one or the other. I will only execute if I see an IFVG with the order block. I used to only use the order block. I found a lot more success combining the IFVG with the order block. And this was actually done through my own tests while looking back at my data from the previous year. Year and a half. I actually only used 1 year and 3 months, so not quite a year and a half, but 1 year and 3 months of my own data and my own trades. Looking back, hey, did the IFVG save me from taking losses? And it did. So I plug in the IFVG with the order block together. Okay, that's the model. We're going to remove that, and now we're going to start back testing. Back testing, front testing, since we are using the bar replay function on TradingView here. Okay, so step one. Start with the hourly time frame here. I'm not going to break down bias. That's going to be for another class, and Steph is going to teach that. Okay, Steph is some might call a demon when it comes to finding bias and draws and liquidity. He has a very, very solid understanding on liquidity and where it rests. Okay. So that's going to be for Steph. Today, we're just going to be breaking down the model, and I'm going to show you, well, maybe, depends on the actual results. We'll see just how powerful this model is on any given week. We're starting with June, and then we're going to move forward all the way until the current day, which is, right now, it's August 9th. September 1st. Anyways. So right over here, we have the 8 a.m. high, the 8 a.m. low, okay, on the hourly time frame. Now you can see price action here. We wicked above that 7 a.m. high. We never came down to those 7 a.m. lows, but price is expanding. We have this right over here, which is a new week opening gap that price actually taps into with this 9 a.m. candle. And if we drop down to a 15-minute time frame, you'll notice we actually don't have any 15-minute CRT in here. So price expands all the way through that. If we drop down to the 1 minute time frame, you'll see that there was no reason to even potentially catch shorts here. And now without a 15-minute CRT, you cannot catch shorts either. Okay. At this point in time, it is 10 a.m. So if we drop down to the 1 minute, you'll see that currently 9:59. No closure beneath that 8 a.m. high, meaning you cannot go short. Okay. Shorts up here would not have worked. Unless there was a 4-hour key level, which there was. So there was a 4-hour key level right there. No 15-minute CRT and no 5-minute CRT. All right, so we can completely remove that. There was no short to be taken there. Now, since the 8 a.m. range is invalidated, and this is exactly how you will validate or invalidate ranges, we broke through that 8 a.m. range and we did not respect it, meaning we didn't close below the high since we ran the high. Okay, so we disrespect that range. We're now going to use the 9 a.m. range high and low. So here's the 9 a.m. lows. Now we're going to locate a potential 4-hour, hourly 15-minute key level. On the 4-hour time frame, what do we have around us? We have that swing high that was already tapped into. We have this CRT low, so no swing low, but a CRT low, and then a swing low right over here. Besides that, there's nothing really there. There's this 4-hour fair value gap that was respected. We'll draw this out just to have. Let's drop down to the hourly time frame. Do we have any key levels above that? No, we'll use the 4-hour key level for that. Any key levels below the 9 a.m. range on the hourly chart? Absolutely not. There's pretty much nothing here that we can look at right next to price. Let's drop down to a 15-minute time frame. Any potential key levels? What we do have are these equal lows right over here, and these equal lows would be the swing point, so a swing low. So this would be the 9 a.m. lows plus the 15-minute key level. All right, and this would be the 9 a.m. highs. We also got a bunch of swing lows on the 15-minute time frame right there as well. Okay, right there. We'll just use this as it's the first swing low in the radius of price, and this is the new week opening gap right over here. Okay, we'll move that to the side. And now we're waiting for a potential 15-minute CRT. All right, so dropping down, it's going to be tougher for me to show the 15-minute CRT if I do this. Let's stick with the 15-minute time frame and just advance price. Right there, you can see the entry is going to come in here, but you can see we have a 15-minute CRT right over here with this candle and with this candle. Okay, so we'll use the 15-minute CRT with the outside bar since this is the inside bar, and we'll just mark this out 15-minute CRT, and then the 9 a.m. highs are in alignment with the 15-minute highs as well, 15-minute CRT highs. Okay, so we have the 15-minute CRT, we have the key level being tapped into, we have the 9 a.m. purge. This is all happening during the 10 o'clock hour. All the confirmations have been met. Now, if we drop down to a 5-minute, we do not have a 5-minute CRT. We do have that 15-minute. Now, let's look for that entry. 15-minute CRT. Candlestick close. What forms? What are we on the hunt for, actually? Okay. IFEG right over here. Clear as day. Okay. Clear as day. Let's mark this out. Bullish IFEG. Let's color this orange. Bullish IFEG. And where's the order block? The same exact candle that created the IFEG. This is the bullish order block. Okay. Bullish order block, IFEG created. Where was this formed? IFEG was formed right here. The order block was formed right here. Now, if we take a look at the R to R, can you enter as soon as both of them are validated? Well, let's see what the R to R. Some of you guys ask this question a lot, so pay attention here. Can you enter the trade without the tap of the order block or IFEG? Can you enter when both of them get validated? Meaning when we close above the IFEG and the order block, which would be right over here. That depends on your R to R and how much you're willing to risk. The R to R, if we did that here, is 1.83. So ideally, absolutely not. You want a minimum 2R trade. Okay, so what can we do? There's multiple things you can do here. You can move this down to the actual order block, 1.94. You can move it down to just as soon as you get to a 2R. Or you can use that IFEG, 2.47. Right, there's so many things you can do. And the thing that makes the most sense is to locate a premium discount. Of what? Of this range. Premium discount, you can see, discount respected. What does that mean? The next range, discount should be respected. That would mean your entry would be there. And you'll see that discount was respected. Pushing this down to there. And then having your TP to the highs. And basically your trade is about a 2.63. Now, can you put this lower? Sure. I'm not going to explain that now. I'm just showing you this is the entry. This is where you would be entering, ideally. And the next 15 candlestick opens up. You want to be entering below the open. All right, that's the opening, basically open, low, high, close, or open, high, low, close. In this case, we're going to use open, low, high, and then close as our theory. If that happens, the open, low, high, close, we need a manipulation beneath the open of the 15-minute candle, catch that low, which is our entry, and then push prices back to the upside. That's the idea here. Now, let's actually see what plays out. We're on the 1 minute time frame here. So the order block being right there. We'll just advance price. Should be tapping into final TP pretty soon. Let's see when this hits. And just like that, final TP would have been hit. So at about 1 p.m. So this was a long hold for 162 points. But at 1 p.m., that your full TP would have been hit. All right. Now, did you get the entry here? Absolutely you did. Why did you get this entry? Well, that was confirmed here. Your entry came here as soon as price came back into that discount right here. That's the entry. And you go long with the stop at the swing low. Okay? And that's pretty much it. TP is at the highs. 162.25 points on Monday. Okay, so Monday, let's actually track this. 162.25 points on the Monday. And now let's see what happens the entire week if we come out profitable. Okay? So Monday got 162.25 points. Why was the 8 a.m. range invalidated? This is all going to be recorded. So once it's posted, just go watch that. I'm just going to briefly break that down here, very briefly. We broke above that 8 a.m. range here, pushed through the new week opening gap, and there was no chance for price to come down here. Okay, there was no 15-minute CRT, no 5-minute CRT. There was nothing. We tapped into a 4-hour key level, and that's pretty much it. Yes, me too, I can hear. Can you guys hear me? Give me a thumbs up in chat if you can hear me. Okay, I see some people are having issues with their Discord. Might be a problem on your end, not on my end. All right, let's move on, guys. I really don't have too much time to be on class today. We're already running kind of late, 1:27, and we only did one example here. Let's push forward, guys. Let's really push forward here. All right, let's advance this, and we're going to need to rewind this. Somebody just asked, how do you invalidate the range? Focus on this, actually. This might actually be the invalidation. So we have the 8 a.m. high and low. How do I know that? I literally just took a look at what happened after. Nothing magical, guys. 8 a.m., right? This is what I mean. We push above that range. Now, was there an actual setup there? We'll take a look. On the hourly time frame, do we have any potential key level here on the hourly time frame? Okay. The answer is this right here. Previous day's highs. Okay. Hourly swing high, previous day high. It's also going to be a 4-hour swing high as well. It's all there. Okay. This is Tuesday. Going back to the hourly time frame, we have the 8 a.m. high and the 8 a.m. low. Now, is there any hourly key level below us? Yep, there is a fair value gap here and a fair value gap here. We'll just ignore this fair value gap because price clearly you can see just ran up. So we'll ignore that. Keep an eye on this and see if there's a potential 15-minute CRT there. Jumping down to the 15-minute time frame. At 9 a.m., you're waiting for price to run into this key level here. Let's mark this out. This key level right over here, you're waiting for price to run into. Okay, at 9 a.m. Does price do that? 9:15? Nope, still not there. 9:30, it actually does do that. And we almost tap into those lows. Now we're going to need to see, was the tap into those lows after the sweep or before the sweep? Did we sweep the lows to then sweep the highs, or did we sweep the highs to then come sweep the lows? We're going to drop down to a lower time frame to verify that. That being said, in this example, the 15-minute CRT that we would be anticipating would be this right over here. Okay, we'll make these thin lines so you can separate the hourly CRT from the 15-minute CRT, and I'll show you what I mean by anticipating it. So this would be that 15-minute CRT that we're anticipating. You can see price swept the highs before sweeping the 1-minute lows. Over here we have the 8 a.m. range high and the 8 a.m. range low. Price taps into the key level, about to sweep the 15-minute CRT range. Okay, and then price starts to move lower. Okay, we have the IFVG form right over here and the order block form right over here. This is an example where you do not enter the trade. Okay, take a look at this. Who is going to enter this trade? Order block IFVG. Close below, retrace to the order block IFVG. Literally just have your entry right there. Stop loss going to the swing high. TPs going to the lows. You have a negative R to R trade. Okay, negative R to R trade, you do not take this at all. Okay, so that's invalidated. You stay standard. You basically stay on the sidelines and you watch what price does. Okay, so that means at this point we're not looking for any shorts there. Okay, if we jump back to the hourly time frame, we'll move on and look at the 9 a.m. range high and low. You can see the 9 a.m. candle closed above the 8 a.m. range. That means what? We should be bullish. Okay, close above. 9 a.m. lows, 9 a.m. highs, same key level, same exact key level, and that's pretty much it. Hourly key level, fair value gap beneath price, that's about it. Okay. Now we're looking for a 15-minute CRT at the highs or a 15-minute CRT at the lows. All right, potential 15-minute CRT right there as soon as price closed. Now, if we jump up to the 4-hour time frame, is there any so let's rewind that. Sorry about that. If we jump up to the 4-hour time frame, is there any type of liquidity that price wants to potentially tap into? Is there any type? Well, yes, there's that high right there. There's this gap right here, IFVG right there. Why would price want to run in that? Turtle soup in lows. More specifically, turtle soup in a daily low right there. So you can see Friday's candle, Monday's candle, Tuesday's candle. Friday's candle took out Thursday's candle's low. Monday's candle started to expand higher. Tuesday's candle is going to do what? Potentially expand higher. This is the range. This is the manipulation. This would be the distribution. All right, so you can potentially have the drawn liquidity there. You can have drawn liquidity on a clean high, which is right there. You can drop down and find highs within the range. Drawn liquidity right over here as well. That's fine. We're just going to keep an eye out on that entire range. Hourly time frame, high and low. 15-minute, we know there's already going to be a 15-minute CRT there. So we'll jump down to a 1-minute time frame and see if your entries actually come in. So previous day high. Let's advance price here. So we actually do get the IFVG right over there. IFVG created. We have the 9 a.m. range high, 9 a.m. range low. IFEG order block right over here. And the entry ideally would be there. Stop loss going to the highs. TP going to the lows. If you would execute the trade here, that would give you a 1.55R trade, which is absolutely terrible. You do not take that trade. You cancel it out. Let's take a look at the midpoint here of the entire range. What do you notice? Midpoint tapped into. Okay, so now let's say this would be your entry here. Okay, 3.29 R to R trade. Let's see what happens. Price will tap into it. That's not the actual entry to take. Okay, look. You'll see. Okay, stopped out. This is not the entry. Why is this not a valid entry? This little candlestick right here, when we created the low, was right at the midpoint. Meaning what? We are respecting the discount of the hourly range. Price action is still bullish. If we're still bullish, that discount of this range should be respected. Why? We have higher draws and liquidity above us on the higher time frames, okay? So this entire thing is going to be invalidated because we already hit the midpoint. That's the simplest way of putting this. If you see price dumping, form your IFEG, form your entry with the order block as well, but we already tapped into the midpoint of the entire previous hourly range that you're looking to turtle soup, don't enter that trade. Just avoid it. If we already hit the midpoint, avoid the trade. Okay, you can write that down in your notes. That's exactly why this is not an entry. So technically, using both the 8 a.m. and 9 a.m. range, there was no trade to be taken on Tuesday. So basically 0 points. Okay, 0 points on the Tuesday. Pretty much it. Okay, so if we tap into the midpoint, good rule to have, don't enter the trade. Especially if you're unsure of bias. Especially if you're unsure of bias. Let's move on to the Wednesday. So on Wednesday, we have the 8 a.m. highs, 8 a.m. lows. Let's actually mark this out. Keep it simple. 8 a.m. lows, 8 a.m. highs. And now we're going to need to locate some potential key levels here. We got the nice 4-hour fair value gap right beneath price action. That could potentially be used to push prices to the upside towards the final draw on liquidity. 4-hour fair value gap. Anything else? We have Tuesday's highs, which could potentially be used. We need to validate price and see what happens, but this would be previous day's highs, 4-hour swing high, probably an hourly swing high as well. Yep. And we still have the higher draws and liquidity above us. Okay, so this high right here, not tapped into yet. Okay, previous day high. Let's see what happens with price on the 15-minute time frame, as we need a 15-minute CRT to form. 9 a.m. opens. We are waiting for one end of this range to be tapped into, and then we'll look at what price wants to do. All right, so we tap into the highs there. Now we need a 15-minute CRT. Let's take that candle out. We need a 15-minute CRT. Do we have one? This is probably the clearest 15-minute CRT that you'll see during this entire class. 15-minute CRT high. And the 15-minute CRT low, which is the 8 a.m. low. So we'll just do this. $15-minute CRT high, 15-minute CRT low. We close beneath that, tapping into the previous day high. Okay. Now, price action is technically bullish towards this high, right? That would be the bias without really looking at a lot of things. This would be the bias. push towards those highs. But instead, we're turtle soup in the 8 a.m. high. We have a 15-minute CRT, and we are respecting previous day's highs after consolidating for a while. So accumulation, like what am I explaining here? Consolidating for a while with a high there. Wouldn't that look like this? Consolidation, manipulation, distribution, right? Power of 3. 1, 2, 3. Excuse my drawings. They're terrible, but it is what it is. That's the power of 3. Accumulation, manipulation, distribution. Let's see what happens, though, if that makes sense, okay? Dropping down to that 1 minute time frame. Why would it make sense here, guys? Well, first off, if the entry is tapped before the midpoint, because some of you guys are probably wondering, why would this not work yesterday on the Tuesday, but today you're going to probably take the trade. So on the Wednesday, take the trade short. The midpoint's not even tapped into yet. So if price truly wants to reverse to the upside, to this high, the midpoint would need to be respected. Okay, that's why. Previous day high, sweeping. What do we see, guys? What do we see here? Beautiful. We have clear as day IFEG right over here. So we got the bearish IFEG right there. And we have the order block. Which candle is the order block? This is important. Which candle is the order block? We'll move this over, the 8 a.m. highs. The order block is this candle. Okay. Why is this the order block? Not this. Like, why is this candle not the order block? Why is this candle the order block? This candle was the turtle soup. Okay. We have range, turtle soup the high, come down, break the low. Which low? The low that turtle soup the high. This is the 1 minute turtle soup. Create the order block, create the IFEG. That's the 1 minute turtle soup. So remember at the start of the session that we did today, I said 1 minute turtle soup is basically the IFEG and order block. This is what I mean. Okay? Turtle soup's happening up here, but the 1 minute IFEG and order block confirm it for me. Okay? Now, tapping into the key level, which is previous day's highs, sweeping 8 a.m. highs during what? During the 9 o'clock hour, IFEG, lower time frame CRT, order block formed. Everything is there. Everything is there. Okay? Now let's see. If you enter the trade here as price validates the IFEG and the order block with a stop loss at the highs, and your take profit to the opposing end of the range, that would be a 2.87 R to R trade. So you could enter the trade here. You could also choose to wait and enter the trade. So if we take the range midpoint, you can choose to enter the range here, which would be inside of the fair value gap, right above the IFEG, and inside of the order block. That entry would be right over here, stop loss at the highs, take profit at the lows, and this trade would instead give you a 5.81 R to R trade. Okay, so let's just say the entry is right here. Okay, since the R to R is good, we're going to keep that here just to visualize what actually happens. Move price forward, tapping into the OB, tapping into the actual fair value gap. We should respect that OB and the fair value gap, or else price is going to stop us out. Looks like that order block is being respected. And before we move forward, I always forget to mention the midpoint is not only a place where price might potentially reverse on you, it's the most important place to take partials. Always take partials at the midpoint, okay? Because that's where price could reverse and then go target the highs, okay? So price comes down, consolidate, expansion to the downside. Looks like this entry would have been tapped as well, so 5.81 R to R trade. Now, the midpoint was hit right there. Let's see if price actually continues pushing lower towards final TP. And it does. So if you moved your stop loss to break even after the midpoint is hit, which a lot of TSR Premium members do end up practicing, okay, moving stops to break even after TP1 is hit, you still would have not been stopped out, so that's a beautiful trade. If you entered on the validation of the IFEG and the order block, you would have profited 102 points. If you entered here with the midpoint of the actual range, you would have had 117.75 points. For the case of tracking this, I'm going to give you where my entry would have been, and it's not this. So you guys clearly see I'm not giving you the most cherry-picked things. My entry, you can validate this with other traders inside of TSR Premium, usually happens when we validate both the IFEG and the order block. I don't necessarily wait for a retest if the R to R is valid. Okay, so this I would have taken 2.87 R to R, 102 points. So that is the Wednesday. On Wednesday, 102 points. Okay. Going short, TP1, of course, would have been the midpoint, TP2, the opposing end. And that's the entirety of this trade. After this, you're done for the day. You're not looking for more trades. That's it. That's it. That's all. Now let's move on to the Thursday. We're almost done the week. It is 1:45. Now we are on pace. Perfect. We got back on pace. Okay. Let's move this forward. I'm gonna take a look at the chat. First off, Raul, I'm sorry, but I speak English, brother. I think that's Spanish. I apologize, man. I can't read Spanish. If you want to just Google Translate that, are going to upload this video to your YouTube channel? Not going to upload this to my YouTube. I will upload it to the Discord for everybody to see for free. Okay? Let's continue moving forward before I start answering everybody's questions. We got the 8 a.m. range low, 8 a.m. range high. Okay? Let's draw this out. And let's just remove the 9 o'clock candle. Make everything simple here. 8 a.m. high right over here. 8 a.m. low right over here. Okay, now we need key levels around price. Do we have any? Yes. What do you notice? Price did tap into the drawn liquidity. This is Thursday. Okay, so drawn liquidity was reached. This entire thing that I explained before of Thursday range, Friday manipulate the low of range, Monday should start to expand, Tuesday should start to expand, Wednesday, Thursday, everything should start to expand until the drawn liquidity is reached. Manipulate, retrace, expand, consolidate, expand. That's exactly what happens. So this is a very important key, extremely important key level for us. Okay, going to put that in the middle, and that's going to be our key level there. Now we're going to look at, let's take a look at the 4-hour time frame. Anything above or below us. Below there would be this 4-hour fair value gap. Besides that, there's nothing. On the hourly time frame, do we have anything around us? The 8 a.m. already took out these swing lows right here. We have another swing low here and another swing low here. We're not going to use this swing low because the fair value gap's there. But we should draw this low and just keep an eye out on this low as well. Okay, so these are all the key levels. Let's just write 1 hour swing low. I'm going to explain why this is important as a key level and why, why this would not be important as a key level. Okay. This wouldn't be a swing low. It's not important because we have a higher low to the left and a lower low to the right. This is a swing low because we have a higher low to the left and a higher low to the right. Swing lows mean you have higher lows to the left and right side. Swing highs mean you have lower highs on the left and right side. Swing high, not swing high. Swing high, not swing high. Swing high, not swing high. You get it? That's what it means, okay? So swing highs, swing lows on the hourly time frame, and 15-minute could be used as the key levels as well. Let's drop down to the 15-minute time frame. We need to locate the potential 15-minute CRT confirmation. Key level at the highs. I wouldn't be surprised if we come turtle soup the 8 a.m. highs to then come lower. That's probably what will happen here. We'll have to wait and see. I'm not gonna depend on that, but let's see the open of the 9 a.m. candle. What happens here? Move up. All right, so this is 9:30 a.m. Price expanded above those highs. If you go on a 1 minute time frame, you can definitely see this. Yep. So price expanded above 1 minute highs and then started to move down. Sticking with the 15-minute time frame, looks like these lows are going to be hit since this key level is already tapped into. Let's see if I'm right. And the lows are hit. Right? Do we have the lower time frame CRT? That's what we need now. We have the hourly low tapped into. Let's remove this since we're not going to use that as the key level. Besides that, no 15-minute CRT. Okay, this is not a 15-minute CRT because we closed below it. Right over there, closed below. Now, since we don't have the 15-minute, let's check if we have the 5-minute because we are allowed to use that, and we do. So we do have a 5-minute CRT that forms right over here. Okay, so you can see the 5-minute CRT forming similarly to the 15-minute CRT. Very similar. Okay, 5-minute CRT formed, key level tapped into, 8 a.m. low tapped into, all while inside that 9 o'clock hour. Okay, let's go ahead and let's make this a thin line here and actually mark it out so you don't get confused. 5M CRT. And the 5-minute CRT low. Okay. Entry is also actually, before we actually maybe find an entry, I have to mention something. The time here is 9:59. Price needs to close back above the 8 a.m. range. Okay, it cannot close below it. Meaning what? If price was here, in this exact situation, 5-minute CRT formed, no 15-minute CRT. If price was not here, where it's at now, and price was here, okay, 9:59, and we close right there, that's not a valid trade to take because we didn't soup the 8 a.m. range. We actually closed below it. However, in this scenario, we close above the 8 a.m. range low. This is the 9:59 candle coming to a close. That means the next candle is going to open right there. Ideally, without a gap, okay? Sometimes, yeah, you'll have gaps, but not all the time. Let me get a sip of water. All right. So, is there an entry here? Let's take a look. Yep, we have an IFEG right there. So IFEG formed right over here. Let's go ahead and mark this out as well. So bullish IFEG and the order block formed as well, pretty much at the same exact time. All right, so the order block formed, the IFEG formed. Now, can you enter off the validation? Would the R to R make sense to do so? The entry would basically come in at that open of the candle. TP is going to the 8 a.m. highs. Yeah, I guess the R to R off of the validation is definitely valid. Yep, 3.67 R to R trade. This is 100% where I would have entered the trade. I would have probably not waited for the retracement down. Now, if you did, that would look like this. So the low to the high right there. Validation of both the IFEG and order block. Your entry would have came in right at the midpoint here. So we'll just move it on the right side. Slightly lower entry, risking less. R to R probably won't change drastically. So about 5.65 R to R instead of a 3.67. That's about it. Both of the entries were valid. I would have taken this. So we're going to move forward with that and see what happens. Am I going to be stopped out here or not? Also, let's draw out the midpoint. That's where we want to focus on, just in case price wants to reverse. Midpoint is TP1, which is right above the 5-minute CRT high. See what happens here. Will we get stopped out? First stop out of the week. Okay, no, we did not. TP1 would have not been hit yet. TP1 basically missed it. So 22,021.75, and the high of this specific candle is 22,020.75, 22. Okay, yeah, so we missed it actually. We missed that. Let's see if we get stopped out. I'm just going to fast forward this. Well, okay. You know, this does happen, but it is what it is. You would have not been stopped out, okay? Even if you move your stops to break even after TP1, which is this partial point here, after the midpoint is hit, moving stops to break even, you would have never been stopped out because that midpoint was only hit right over here. So even if you moved your stops to break even, price only retraced this much and then expanded, okay? So final TP was only hit very late. Like not as late as the other trade, but here was hit around 11 a.m. Okay, the entry came in just around 950-ish in the macro, and then moving to the upside. So that's about 162.25 points off of my entry, and about 175.25 points off of that premium discount entry. Okay. We'll remove that premium discount entry and only use my actual entries that I would use to track this. So that's about 162.25 points on the Thursday. 162.25 points for the Thursday. It is currently 156. We're running behind just a bit, but let's go ahead and cover the Friday. So done for the day on the Thursday. I should have probably kept everything there. Yeah, let me do that. Keep everything there. Let's jump to the hourly time frame and look at the Friday. Fast forward this just a bit. All right, so we have the 8 a.m. range high. Let's draw this out. And the 8 a.m. range low. There was no losses. This is the first week of June. No losses on this week so far. I mean, maybe I just jinxed myself. Maybe Friday here gets us a loss. Let's see. Any hourly key levels above or below price here? Before we actually look at the hourly, let's take a look at the 4-hour because that might just be more important. Okay. Nothing really on this 4-hour time frame. Anything below? We have a 4-hour fair value gap below price, which could potentially be used right there. So 4-hour gap. 4-hour rejection wick. That's the drawn liquidity of the week. Technically, right now, we would be bearish since the DOL of the week was hit. Midpoint of the rejection wick could be respected. Taking that as the key level into consideration here, since, manipulation, distribution towards the drawn liquidity. Now, ideally, at the end of the week, we should not continue to expand, and we should retrace the weekly range, which happened actually on Thursday. Now that I see price. All right, let's go down to the hourly time frame. What do you notice? The hourly gap overlaps with the 0.5 of the actual rejection block. We'll go ahead, draw the hourly fair value gap here just to have. So hourly fair value gap right there, 4-hour gap beneath us, 4-hour rejection block midpoint above us. Let's drop down to the 15-minute time frame here and see what happens. Price since the open of the Friday, this was 18 o'clock. Opening, expanding to the upside. Yeah, this might be a complete reversal to the downside, actually. Lots of liquidity forming there. Let's see what happens here on the 15-minute time frame. Nothing yet. All right, price on the 15-minute time frame is expanding up through that hourly fair value gap here. Did we respect the midpoint? Midpoint not yet tapped into, so we are technically still bullish here. All right, so we end up tapping into, let's remove this fair value gap. Let's keep the chart simple. We're going to use this midpoint. Let's remove the 0 and 1 level. The midpoint of the rejection block on the 4-hour time frame. Okay, now we would need a turtle soup of this 15-minute candlestick high if that happens. This is the only place I want to look for shorts right now. Okay. Let's see if we get that. Should we? And we do get that. Interesting. Interesting. We do get that. Right at the midpoint. Let's do this. At the midpoint of the 4-hour rejection block, we do get that. The problem, I'll show you the problem on the 1-minute time frame. You'll see it. Is this a valid short? Serious question, guys. Would this be a valid short? We're above the 8 a.m. range, above the 8 a.m. range, okay? Important. There's a reason why I emphasized 8 a.m. We turtle soup the 15-minute CRT at a 4-hour key level. Okay, look at the time of this candle. Okay. Why? Well, actually, is this a valid trade to take short? Right? Is this a valid trade to take short? Answer me in chat. Very quick. One person said yes, the rest said no. Whoever said, okay, 2 people said yes. We in 50%, so no. No, we're not in the 50% of the 8 a.m. range, which is this. Okay, I'll tell you guys now. The answer is definitely 1000% not. Why? It's 9:59. That means price closed above the 8 a.m. range. If price is closing above the 8 a.m. range, the entirety of the 9 a.m. CR model is not at play. It's literally not valid. The entire 9 a.m. model is not valid. Okay? Exactly. Time gone, so no. Exactly. No close below. Not valid. Now, what we could do is use this high as the 9 a.m. range high. And we actually might get that. This might be a perfect example here. Okay? And the 9 a.m. lows we would need, which are right here. The key level, what would it be? Still the midpoint. All right, looks like we're not going to get that. Price actually ends up tanking here. We did not get our entry, which is unfortunate, and there's going to be no trade for this 9 a.m. candle. Why is there going to be no trade? We're already at the midpoint, actually beneath the midpoint of that 9 a.m. range. So no trades. We're just going to invalidate that. And that's the Friday. Okay, so no trades Friday. It looks like, let's actually get the recap here. Let's jump to a 15-minute chart. So on the Monday, trade taken. This was This was 162.25 points. Trade taken long. Tuesday, no trade taken on Tuesday. Wednesday, we took a trade. Wednesday was 102 points on Wednesday. And the Thursday, did we take a trade? Yes, we did. Thursday was 162.25, similar to Monday. That's very interesting. Very interesting. Let's just double that at that point. That's very weird, honestly. The same exact move, 162.25 points to the tick from Monday and Thursday. So that means on the week here, and this is the first week of June, let's do the math. 162.25 plus 102 plus another 162.25 gives you about 426.25 points on the week, and that's with skipping 2 trading days. So that's with Tuesday and Friday being out. 426.25 points. All right, so that breaks down the entirety of the first week of June using the 9 a.m. CR model. Okay? I think that's where I'm going to call it. It's 2:05. I wanted to end at 2 o'clock. However, I wanted to end the entire live stream at 2 o'clock, but I still need to show you one model. And what I'll do is... Let me briefly cover it. Let's briefly cover it. We're going to keep this here. This entire backtesting series is going to continue going on for the next coming weeks. However, right now, I want to show you a different model, so to say. So a model that you can start executing during the London session. Some of you guys may know it. It's called the London Twilight model. I've taught it once on my YouTube channel. Those of you who watched it took advantage of it. Those of you who didn't. TSR Premium members are actively trading the London Twilight model. Basically all TSR Premium members know about it, know what it is, know how to execute it. Some of them are actively executing that and making money. And if you take a look at my short form content, basically on TikTok, YouTube, Instagram, you'll see me mention the London Twilight a lot also. Okay? What is the London Twilight? Basically the same thing as the 9 a.m. CR model, but during the hours of 3 a.m. up until 5 a.m. You use the 2 o'clock range or the 3 o'clock range. Usually you want to see the purge happen at 3 a.m., but sometimes it will happen at 4 a.m. If it happens at 4 a.m., that's when you use the 3 o'clock candle as the range. This is a very brief description of it, okay? You want a purge of that range, and then you want an expansion to the opposing end. You want a key level as well, coming from the 4-hour, hour, or 15-minute time frame. That's it. That is literally it, okay? What do we have? I'm just going to pick here, honestly. I was going to go back to this week that just formed, like in August, so last week, but let's just pick anything here. So let's go ahead, turn on the magnet. 2 o'clock low. 2 o'clock high. Let's just mark this out. 2 a.m. Very, very similar to the 9 a.m. CR model, guys. The only difference is the timing. The timing changes in the London. And if you go look at this, it forms almost, okay? So it doesn't form every single day on the same asset. If you're looking at multiple assets or pairs, it's going to form every single day. But if you're looking at one, sometimes it won't form. But when it does, the probabilities are insanely high. The reason why this model is liked by a lot of people is because the volatility is not there. The manipulation that comes in from 9:30 market open is not there. So there's a good chance you will not be manipulated out of your trade even if you have the right direction. That's the beauty of London while trading the NASDAQ. But the only there is a downside, slower price action. That's it. Smoother price, but slower. That's it. Will we get the recording? Yes, you will. Don't worry. Okay, so 2 a.m. high and low. Do we have an hourly key level above that or below that? Yes, we do. We don't even need to go to the 4 hour. Hourly swing low. Why is this a swing low? Higher low to the left, higher low to the right. Hourly swing high. Why is this a swing high? Lower high to the right, lower high to the left. Okay, that's it. So let's mark this out, key level. Let's mark this out, key level. For the sake of it, let's go ahead and do this and actually locate a potential 4 hour key level, because this is what I would do when it comes to the real time. Only 4 hour key level would be this swing low right there. We close below that 4 hour fair value gap. I would not even use that. So it would be that swing low right over here. 4 hour fair value gap above. And that is it. That is literally it. Okay. So now if we drop down to the 15-minute time frame, we got to locate sorry about that. I got cut out. Okay, we're back. Don't worry. Okay. So on the 15-minute time frame and 5-minute, we're looking for CRTs to form. We have our key level here, 2 a.m. low, 2 a.m. high, key level above us. What do you notice about this key level in the 15-minute time frame? Insanely clean. This might be the target. So it looks like we want to turtle soup the 2 a.m. lows and then tap into these highs. That's a solid drawn liquidity. We might even be able to extend take profits to that high instead of the 2 a.m. high. 5-minute time frame, pretty much the same thing. I'll remove the drawings. You can see it perfectly. Very, very clean. Very clean. Is the screen frozen? I don't get it. Is it? Nope. Okay, got it. I guess it's Discord lagging on some people's end. Anyways, let's move on here. We need a 15-minute or a 5-minute CRT. Do we have a 15-minute CRT here? No, we do not. We closed below. Do we have a 5-minute CRT here? Yes, we do. 5-minute CRT low. 5-minute CRT high. Let's just mark this out. And we'll move the key level over to the right side. Drop down to the 1-minute time frame. Entries are the same. They're the exact same. Okay. 2 a.m. highs. Equal highs above. Very clean. Equal highs. Okay. Now that we're organized, let's run this. We need an IFVG to form, and we need an order block to form. Do we have an IFVG that forms? The answer to that is absolutely yes. Okay, very obvious, very clear right there. Do we have an order block that formed? No. No, we don't. Let's do this here. IFVG. No order block. We need to wait. Okay. Still need to wait. All right. Order block formed. Right there. Entry. Let's see if it's valid if we enter here. Right at the validation of both the IFVG and the order block. Stop loss going to the low. TP going where? Opposing end of the range. Okay, this gives you a 2R trade. Honestly, I would enter this trade here. I wouldn't even wait for a retracement. So entering right there off the validation is valid, 1000%. Okay, And now, especially if you're extending your TPs towards the equal highs, which ideally you should, okay, in this situation. That's 67.75 points in a London session on NQ. Okay, a London session on NQ, 67.75 points, while avoiding 9:30 market open. Avoiding the manipulation that comes in at 9:30 market open that stops out probably, honestly, a majority of traders out there. That you are avoiding completely by trading the London session if you're capable of doing it. So entry right there going long. See what happens. TP1 is going to be the midpoint of this range. Right there. TP1 was hit. TP1 was hit already. Looks like this trade is going to be slightly longer than usual. Yeah, it's already 4 o'clock. Let's see what happens. Let's just make this run out and see if it actually hits the TPs or if it lags behind. Insanely long trade here. And finally, just like that, full TP would have been hit at 7 a.m. Full TP of the 2 a.m. range would have also only been hit at 7 a.m. Looks like this would have been an insanely long session, but still valid to have taken this trade. And that's the exact model, guys. This setup forms almost every day. Almost every day. If you're looking at more than one asset or more than one pair, it will form every single day. And when it forms, the probabilities are insanely high. I have TSR Premium members executing this, and I have free members executing this. The free members are profiting. Guys, the free members that are executing London Twilight are machines. They are absolute machines. I'm always getting DMs of guys, thank you for showing me the London Twilight. It's changed my life. Look how many payouts I've gotten. Look how many past accounts I've got. All this stuff. And I'm like, damn, it looks like a lot of people probably just need to avoid the heavy manipulation that comes in at market open. That's probably what was causing them all of their losses. And if they could find a model that works at a different time, when the manipulation is less, maybe, just maybe, they might be profitable. Anyways, guys, that's going to finalize this entire live stream. I've been going on for about an hour and 7 minutes now. It's 2:16 p.m. Slightly running late here, but it is what it is. I really hope you guys enjoyed this, though, for real. I really hope you enjoyed this. Because, first off, I'm taking an hour out of my day to do this. But the biggest thing is I'm doing this to help you guys. Okay? There's no other reason to do this. And there's still 64 people in here, which is pretty good because I think the high we were at 80 members. So only about 15 members have left since the high, which means a lot of you guys are here to learn. And I'm happy about that. All right? That is pretty much it. That's pretty much it. Maybe next week I'll have another free class. I don't know about next week. It might either be next week or the week after. Okay? Don't mark my words on that. Burak, you're late. Don't worry about it. I'll post the recording pretty soon, so you don't need to worry. Okay? Recording's going to be posted, guys. Don't worry. Oh, almost forgot. Before I go, let me just announce this very quickly. Let's copy the link here. All right, guys, those of you who want to, so I'm pretty sure there's a lot of free members here. If those free members, maybe you don't know this, you can join TSR Premium for free for 7 days. Okay, there's a free trial right over here. I just posted it in the chat. So that's the free trial for everybody. It's a 7-day free trial. Make sure, listen closely, because I'm not going to refund anyone, okay? You need to do your, pay attention. That's all I ask. Just pay attention. Don't make stupid mistakes. If you sign up for a free trial, before the free trial ends, go cancel the subscription, or else it will auto renew. I say this every time I share the free trial, because all the time, literally without missing one single time, there's always somebody, hey, I forgot to cancel the subscription, it rebuilt me, I want a refund, this and that. Guys, the refunds hurt TSR's WAP reputation. Yeah, like, it's not the fact that I need to refund your money. I could care less to refund you. I'll refund you, no problem. It's the fact that Stripe will punish WAP, and that means WAP will punish us, the user of WAP, for having refunds. Okay? And that puts holds on all of the money, that puts holds on all kinds of stuff. Once you make a payment for a subscription, if you don't want it, the way WAP works is that it's an automatic rebilling process. Okay? We have zero control to turn that off. It's an automatic rebilling process. If you don't want the subscription to continue, cancel it on the 5th day. Put a reminder. 5th day, cancel it. Guess what? You'll still have access to the end of the free trial. It just won't auto rebill you. Make sure you do that. Okay? That's for the free trial. Okay? I hope that was a good enough warning, man. I really, really hope that was a good enough warning. Because that shit's annoying for me. No offense, I'm sorry guys, but that gets annoying for me. When I see the same messages over and over and over again, even after I repeat myself. Alright? That's for the free trial. Those of you who are interested in something a lot more than TSR Premium, Steph, I'm refunding now. Somebody said, what about USDT users? Guys, I do apologize. Right now, we are not accepting any crypto as payments. It's just too hard to manage everything with the crypto. So we're not going to be accepting any crypto payments for the time being. I might start accepting crypto payments soon again, but right now, no. It's a hard no right now, okay? That's that. Oh, before I actually leave, last thing I want to mention, guys, okay? Those of you who want something a lot more than that TSR Premium, which is basically just me and 2 other mentors live trading. There's a CRT masterclass in there. We also help you, we answer your questions, we help you out. There's live classes too in there. Besides that, if you want a more catered, hands-on, one-on-one approach to things where me and Steph will literally be on a call just with you. You can talk to us whenever you want. We'll correct all of your mistakes, keep you accountable, give you an updated masterclass, and then put you on track to, here's where it actually gets big. We'll get you on track to get a payout from a prop firm account in 90 days or less. Okay? And if we don't do that, then we will work with you one-on-one until you actually do. And you guys probably guessed it, that's the one-on-one program. If you guys want the one-on-one program, it is right here. I just pasted it in the chat. It's not going to be for everybody. All right? I'm warning you guys now, the price is not cheap. We're shutting down a lot of people. Okay? We're being very picky. Right? For me to offer a guarantee, like 90 days until payout. So payout guarantee we're offering. 90 days to get there. I need to shut down a lot of people because some people, sorry to be brutally honest, will just not get there. They'll never get there. Okay, I'm just being brutally honest. But the ones that we feel we can take there, we're bringing on, we're making them work, and we're getting them to their first payout. Okay, that's that one-on-one. Now, besides that, I think I want to just shout this out again. Right here, I'll paste this in the chat now. This is all free, guys, in the 9 a.m. CR model guide. This is free. If you go there, you'll see the PDFs. So the 9 a.m. CR model checklist and all of my models checklist. That's free for you guys to have. Okay, if you guys want the checklists and the PDFs, that's all free. It's right there in the Discord channel. Just go there, click it, and go. Basically just go read that, okay, and go collect that. I also have, not sure what happened. Interesting. I wrote the wrong thing, guys. Give me a second. Let me edit my message. That was the wrong channel. PDFs and more. That's the right channel. So you have both PDFs in there, the models and the 9am CR model. And there's going to be a lot more PDFs uploaded there very soon. There's going to be a how to rate your setups, how to rate the 9am model, 9am CR model setups, A+, B+, C+. Okay? There's going to be another PDF posted there. Also, a psychology PDF is coming out soon. Stay tuned for that. Now, I am really done. I keep on talking. I'm sorry. Sorry to annoy you guys on a beautiful Monday. I'm going to head off. Somebody said, for the next time, just a heads up, your stream loses audio after a few seconds for us. Can you please try the following? Make sure you're using the Discord app, not the browser. Okay, number one, I am using the Discord app. All right, when starting the stream, check share screen audio. I am sharing screen audio, okay? Try sharing your entire screen instead of just a single window. Okay, I could do that instead, but if possible, audio drivers, NVIDIA, restart the stream. Listen, guys, in my opinion, I think if you're having issues, it's on your end, because there's a lot of people in here that had zero issues during the stream. So Ed Booch or Ed Book, whatever your name is, I apologize for any inconvenience. Really do apologize for any inconvenience, but that's likely on your end, not on my end. Like, everything's running smoothly. So that's that. Yeah, there's a lot of people with zero issues. That being said, the recording is going to be posted. So you really, really have no worries. Zero worries. You have no worries in the world, because just go watch the recording and you'll be safe. No cutouts, no blackouts, no whatever the hell. Just straight recording. Free members have access? Free members have access to the PDFs and more. Yep, absolutely. Those were made for free members. No? Interesting. Maybe I got to change the permissions. No, it looks like you have access. Interesting. I'll have to see why there's no access there. Yeah, you guys should be good, to be completely honest. I'll try to see if I could get that fixed after the stream, but on my end, permission basically says that I can view it even if I have no roles. All right, guys, I'm going to look into it after the live stream. Okay? Okay, I'll look into it. All right? That being said, let's finalize again. Recording's going to be posted. If you want the free trial, scroll down, click the free trial Discord channel, get your 7-day free trial for TSR Premium. You can watch us trade live every single day. There's a masterclass in there. There's a bunch of things in there. Go read the description. One-on-one mentorships, they're open, insanely limited. If you want to go sign up, go to the one-on-one channel. It's there. PDFs, important for you guys. This is all free. PDFs are all free. The channel, I'm going to make sure after the live stream ends that all of you guys can see it and you can go there. That's it. That's all. I'm out. Hope you guys really enjoyed this session. And I will catch you all pretty soon. Premium members, I'll see you all tomorrow. Okay? Public members, we'll keep in touch. Talk to you soon. All right? Take care, everyone. Have a beautiful Monday. We'll talk soon. Bye-bye.